I'd like to welcome you to this session on equity crowdfunding, financing revolution, or high-risk investment. I'm very pleased to be able to introduce our panelists. We have Michael Hughes, Senior Director of Equity Crowdfunding from Indiegogo, Michael Simca, Producer and CEO of Simca Entertainment, Danny Andrews, General Counsel of Image Nation, and the session will be moderated by Fiona Robertson, Senior Associate of Altamimi & Company. Please give them a round of applause.
Good afternoon, everyone, and thank you for coming out on this Friday afternoon to listen to us talk about crowdfunding. I think it's fair to say that crowdfunding has come of age now. My understanding is that Indiegogo is about to celebrate its 10th birthday, and it's no longer a place where people go to try and get money. It's now a valid and respected way of raising revenue for not just films, but for many other things as well. We're going to, I've got a fantastic panel here today, so hopefully I'm going to get some good information out of them, and of course we'll do some questions at the end. I'm going to start with Michael S., who is currently in the middle of an equity crowdfund, and I wanted to ask him to talk to us about what he's doing, why he made the decision to do this, and how he's going with the experience of being mid-crowdfund right now.
Thank you very much, Fiona. Hello, everybody. So I decided to sort of decentralize the investment into my company about a year ago, or to my projects, I should say, with a company called Bravo Bunny LLC. Bravo Bunny LLC is the owner of two films, Adventures of Bunny Bravo and Un Conejo de Huevos in Spanish. And the way we did that was through acquiring foreign, so we already decentralized the film production model by purchasing an animated film overseas. We've done it 14 times. This was our 14th one. We recut the film and put it back together with a new dialogue, new story, and American actors like Ariana Grande and people from Nickelodeon and such places. I did this for major studios, and I thought that the future is going to be in this sort of community-based investment, community-based distribution, and we were looking for the best place to do that. And the best model, right? So there are standard crowdfunding, which is not really an investment. You're asking for donations and you can give a gift. Not really a business model that we were interested in at that time. And then there's also obviously IPOs and the more complicated equity or investment models out there. But equity crowdfunding, which has been allowed in the US for the last, I guess, going on 2 years now, really seemed to be that place right in the middle that fit all of our needs. And it sources the crowd, allows anybody to invest around the world, really, with a minimum investment of $100. It's regulated by the SEC, so it was just sort of right in the middle. So then it became a question of where did we want to go? There are other crowdfunding, equity crowdfunding platforms like WeFunder and FlashFunder and so on and so forth, but they kind of had a lot of things that I didn't really understand. I didn't understand how their model worked, and Indiegogo, in partnership with MicroVentures, really seemed like they had that model together. They were looking at this long term, and they were vetting their projects, and they wanted to. They worked on very specific, I want to say a little bit more conservative models. And so, Michael and I started talking, I guess, a little over a year ago now, and we went through the process. It was about a 4 or 5 month process until we actually pulled the trigger, and we did the Bravo Bunny equity crowdfunding campaign. That lasted a little over 2 months. It was a campaign for $500,000. We raised the entire amount. We oversubscribed, which means we had to turn some investors away, and they had to wait for the next one, which started, it's actually on now, closes on well, actually I can't say when it closes, but there's still time left, I'll say that. We're regulated by the SEC, so there's certain things that I can and can't say. It's a little tricky in that matter, but there is still time left on that. That's for Super Dope TV. Super Dope TV, and it's an online television network for kids. Basically, like we like to think of ourselves as like a punk rock, modern day version of Nickelodeon. Like, what's the next generation of Nickelodeon?
Just going back to that statement you made about the curation of content and the way that Indiegogo selects, I want to throw to Michael to talk about the way that Indiegogo works with people who want to create content and want to fund it through his platform, because I understand that there's a fairly rigorous selection process that goes on.
Yeah, thanks Fiona, and thanks for attending everyone. So trying not to confuse this too much, so Indiegogo, like Fiona said, is actually turning 10 years old in January. So we invented this whole crowdfunding thing. It wasn't called crowdfunding, it was just a bunch of people that had this idea where they wanted to bring their community and their friends and family to invest in things. Long story short, the laws didn't exist in the US because the US likes to be very slow on these types of things. So they had to invent a legal way to do it. So as Michael mentioned, the crowdfunding, the regular perks or rewards crowdfunding, we've been doing that for a decade. We've done $1.5 billion of crowdfunding, regular crowdfunding, hundreds of thousands of projects. We started in film, so we actually launched at Sundance 2008. We've expanded into film, tech, movies, music, you name it, we do it. So that's our regular business, that's not going anywhere. Equity crowdfunding, as Michael said, is pretty new. We've been doing it for a year. We do it in partnership with a company called Micro Ventures. First thing I want to say is it's still very new. Okay, equity crowdfunding is a brand new, not only like vertical for us, but it's a brand new industry. Okay, so it should be called crowd investing. Especially in the US, it's extremely new. In Europe, for example, they've been doing equity crowdfunding for about 5-6 years. So this model's already proven to work. It's just now it's finally allowed in the US. To answer your question, we take a very curated approach. Right, so our regular crowdfunding platform, anyone can go onto Indiegogo and launch a campaign. So you today right now, you could go on there, create a campaign and launch tonight. It probably won't do very well if you do that, because it takes some planning and time, but you can do that. Equity crowdfunding, you have to apply, we vet these projects very carefully. We've been around for a year now. We've done just over 30 projects, 30 offerings. So I think we accept something like 1% to 2% of the applications we get. And that's not because we're mean people, but it's because there's a few reasons. One, like we really believe that because this is new, we're still testing and we're still learning. We're humble enough to say like, look, we don't know how this all works. So when we first launched we launched with 4 projects. We had no idea what we were doing and they had no idea what they were doing. Luckily, they all went very well. And we've actually funded 100% of the projects we've done, so we're pretty proud of that. So that's one, we didn't know anything, so we wanted to learn. 2, this is a heavily, heavily regulated business, as Michael mentioned, by the SEC and FINRA in the US. So Indiegogo is a big brand globally, we actually have more risk than some of our smaller competitors, where we can't just throw up 100 deals, investments, and we find out 3 of them are scams or 5 of them are total crappy investments. We're done, we're out of business. So there's a lot of reasons for it, but we also, finally I will say, like, we only have maybe 5 to 10 offerings, which is what we call campaigns on the equity side, live on the site at any given time. That's on purpose. If you go look at some of the competitors, there might be quite literally 80 plus offerings live. I just looked at one last night, 80 plus. If you're the 80th on that list and you're buried in that scrolling, are you going to get any attention? I'll let you guys answer that question. So we take a very serious approach. If we work with someone like Michael, we're like, you're getting front and center. We're going to go to bat for you. We're going to try to fund you as much as possible, and we will try and probably will get you funded.
It's interesting that you seem to have a very close relationship with Michael, who's obviously one of your sort of your projects. You work very hard to help these people promote their projects. What sort of input do you put into their marketing and the way that they take projects to market?
Yeah, good question. So every project we work with is very different. Fortunately, Michael, what we like about Michael, and he and his team are quite good at marketing.
That.
Yeah, he's a walking marketing
out there, actually.
So it's funny, like we'll get these amazing companies that are actually, we think are great investments, but they have zero idea how to market. They're like scientists or engineers and they just have no idea. That's okay. But honestly, crowdfunding, the way I'll answer that question, crowdfunding is just marketing. So at the end of the day, any crowdfunding, equity crowdfunding, perks crowdfunding, anything, it's marketing. And the best projects are ones where, the way we look at Indiegogo, we're an amplification platform. And by that I mean, we can amplify your marketing. But if Michael comes out with a project like Bunny Bravo that he did first, and he can't bring his own friends, family, mother, colleagues, to invest in that project, then how are we going to get strangers to invest in it? So the key to any crowdfunding, is you bring in your own community, and then Indiegogo pours the gas on the fire. So we have a massive global community, but this is true across any investing, VCs, et cetera. Nobody likes to lead. They all like to follow. Nobody leads. So crowdfunding is the same thing. You got to get your people, and even if they like the project, they're going to like it even more if they're like, holy crap, 150K on the first day? I want to be in on that. I better not miss out. So it really is like a partnership between us. We help with our marketing, and their marketing will give tips, but you really need to have a marketing plan as the actual company raising money to really make this work.
No, going to you now, Danny, if we could. I think everyone is aware that Image Nation is a government funding entity. They don't get involved in crowdfunding. But we wanted to have Danny on the panel.
Not yet.
Not yet. We wanted to have Danny on the panel to give a perspective of a traditional funder and how they view crowdfunded projects. When it comes to the excitement that a project may create on a platform like Indiegogo, how did that make you as an old school investment house? How do you view projects that get that level of excitement? Would that be something that you would look at when you're considering investing in a project?
Yeah, right. I think more information is always better than less information, right? And so the things that I'm concerned about when I'm looking at making a decision about funding is those things don't change, right? Is the script good? Are there attachments, that I care about? Do you have a sense of pre-sales or a distribution plan? Those kinds of things I'm still always going to be thinking about. But to the extent all of those things are there, or there are places where maybe some of those things aren't there, but now you've got this extra piece that's like, oh, but I was able to raise 150,000, whatever, in this period of time, or I can tell you that, these kinds of people are really interested in this type of story because this story is particularly relevant right now. It becomes something that I will throw into the mix, and it may or may not tip the scales in one way or another, right? But it won't be a situation where, oh, this person, raise a ton of money here, so let me just throw all, caution to the wind and just finance this anyway. We still have, certain things that we would need to assess. But I think it's useful. I think it's useful information is what I would say.
Just following on from that, I'd like to talk a little bit about attachments and about distribution platforms. I'd like to ask you all how you view the way that crowdfunding has risen alongside new platforms like Netflix and like Amazon. Do you think that the fact that there is now much more capacity for content to be viewed through these new platforms, do you think that's helped in crowdfunding and in the way people use and view crowdfunding?
Well, we have pretty specific views on Netflix and Amazon. I'll try to make it as general as possible. But for example, Amazon has, both of them, they have the two largest budgets of acquisition out of all the players in the entertainment industry. Netflix has a budget of $6 billion, and Amazon was something like $4.5 billion or something like that. Just, they can buy everything. And so our business is probably a little bit more acquisitions than it is originally developed content within our organization. And so we meet with people who have already met with Amazon, and when we're acquiring one of these animated TV series or animated films, they've already done a deal with Amazon, or they're thinking about doing a deal, because Amazon is just working with everybody. They just want everything. But because they're taking so much, they've scaled it in the technological sense that you can just upload your content and you get a space in their file tree and it comes out at this place. But they're not getting what Michael was referring to. They're not getting the showcase, right? They're just a number in this giant Borg of content. And so when we're talking to the people we're acquiring content from, is like, well, when we take your cartoon, we're going to add our creative touches to it. We're going to make it match the Super Dope TV flavor and sort of our approach to kids' content, and it's going to kind of match the other stuff that we acquire and the stuff that we develop in-house as well. And then they're Super Dope TV characters rather than just these characters you don't know where they are. They're in a void, and somehow they wandered into Amazon. So I know that sounded a little negative, but on the positive side, I would say that Amazon, with their DIY distribution, they allow anybody to distribute at any time. You can fill out your contracts right online and upload your contract, and upload your content. So then you can go over to Indiegogo and raise money through a perks campaign, which is pretty much DIY as well. So you don't need anybody. If you want to make a movie and then you figure out, the marketing angle, which is, like Michael was saying, the hardest part, you don't need anybody. And that's really like our philosophy, is we don't like to work for bosses. Like the reason I'm not distributing my movies through Lionsgate or any other studio now is because I don't want to answer to anybody about what I can and can't put in this content, and I want to make it as fun and crazy. Like the only people I want to answer to are the audience. If they want this, then I will make sure that the content is formulated in such a way.
Yeah.
I just have one quick comment that I'll look at. So the cool thing, and Danny touched on this last time too, is the thing about crowdfunding, it's not the be all end all. Like, you definitely should, oh my God, I raised a ton of money, we should just dump money into it. Totally agree. But Indiegogo also, I truly believe this, we built the greatest market research and market validation firm on earth. Okay, so it's too early on the equity side. We've only been around a year, and so stay tuned. There will be some major successes there, but the perk side, tons of films, tons of things will end up at all the major film festivals. I'm trying to think of a recent one, Dear White People, go look it up if you haven't. It's on Netflix right now. That originally got funded at Indiegogo, then they got bought by Netflix for a series. Happens every day, and it's the people just like Michael that a lot of people are like, this is a horrible idea, I would never fund that. They're like, all right, fine. Let's bring it to the crowd, let them show you they want this, and then boom, not only do they buy it, but you get better terms.
Yeah, I agree with everything that both of you have said. I tend to also just sort of feel like most times if there is a technology or more people in the space, it's breaking down barriers to entry. It's allowing people who didn't have a seat at the table, whose stories weren't able to be told. It's giving them an opportunity now to be able to do that more so, and I genuinely think that's a good thing, right? I think that is separate from, there's a qualitative and quantitative sort of analysis that needs to happen, right? And I think, some people are fine with just being in a queue and, collecting a check, and some people want a far more involved qualitative experience, and we offer that, right? And it's through, I think, not we, but, Indiegogo and the like offer that, and I think through competition and through having more players in the space, you're forced to sort of hone your craft and determine like where the gaps are and what needs need to be filled. So I think generally it's a good thing.
I think that's a kind of on a broader level, everything is becoming decentralized, and the democratization of funding, the democratization of distribution, democratization of creation of this content, these are all great things. But when you scale that, you have billions of people doing that, and they all go into this kind of Borg. So then the second step of that is the curation of this content, the curation of the investment, the curation of the distribution, and that's opening up it's a sort of another layer of the industry, which I frankly think is the future, right? And that's why we're working with Microventures and Indiegogo rather than some other guys who just, decided they knew the code to make their own crowdfunding, and they submitted the documents and they did it somewhere else and nobody knows where they came from, kind of a thing. You still want to use your best judgment and kind of see their track record and things like that, even though we want it to be as democratic as possible and let everybody have a chance to do it. We still want to look at, things that, our common sense tell us is a good thing to do, right?
Yeah, I just wanted to touch on the way that crowdfunding seems to be a very natural fit for more creative, more independent, maybe more edgier content. Looking at Danny, who obviously works for more of an institutional investor, there's only so much you can do, I guess, within the confines of your investment model. Do you think that crowdfunding naturally lends itself to the funding of this more edgier content, or do you think conservative content still has a place within the crowdfunding environment?
I mean, for me, my philosophy is entertainment for its own sake, and so the thing that I'm really moving away from in the studio environment and traditional funding environment is that everybody has a message they want to get across, and everybody has their own sort of like, well, I like this because of some other reason that has to do with, something other than entertainment. The only thing that we care about is making the people laugh, making the people get excited, and making the people enjoy themselves, and keeping everything else out of that. And remarkably, that's a very difficult thing to do in Hollywood, because if you let just one thing change in that model, that we're going to make a really fun movie, but it's also going to be this, then that also, it doesn't just change a little, it changes the entire vibe, the entire point of that content. So I think being able to be specific about what you want, whether it's an edgy content or whether it's about whatever your goal is, you have to be very precise about that, and you're not going to be able to do it if you have a bunch of bosses telling you that you have to do it some other way.
But I also think, in the traditional model, and I honestly, I think ImageNation is probably a bit of a hybrid in that, yes, we're funded by, the government, but we also have a lot of leeway to invest in any number of things. The first project I worked on 4 years ago when I started was the Malala story. Right, and that's not particularly traditional, and in this region, not particularly the most. We didn't go into it thinking about making money. Right, there was a story that wanted to be told. His Highness was particularly interested in telling that story. And we partnered with the right people that allowed that story to be told, but still make sense from a financial perspective, right? We also partner, we have film fund partnerships with a number of producers and distributors in the U.S., and one of our big partners is Participant Media. And their whole sort of remit is around doing sort of social good type movies, right? And so we fund those movies, and maybe we don't deal in this sort of day-to-day, but we say, look, we'll create a fund, you're the expert in doing this kind of thing, so we let you sort of focus on that. So I think even within the traditional model, there's some space to create edgy or sort of non-traditional content and get non-traditional stories out there, for sure.
Yeah, and obviously, again, Indiegogo, we fund everything, so it's not edgy or not edgy, it's everything. I mean, we've literally done thousands of films now, and I'm trying to think of recent examples, there's so many, but we've done plenty of edgy stuff, and that's great. We love that stuff, because again, we're not the judge, we're just, we're not a gatekeeper. Our whole business is about removing the gatekeeper, We also funded recently, I forget the name of the movie, forgive me, but starring Don Cheadle, and it's the story of Miles Davis. That was 100% funded on Indiegogo. I wouldn't call that very edgy, or maybe you would, I don't know. But like, you know what I mean? Like that's a legit story. So we do everything. You know, like there's no, I think crowdfunding again is the ultimate equalizer, and it's not about if it's edgy or not edgy or this or that. It's just, let's put it out there and get real-time feedback. But that's seriously the most strongest thing isn't the money. It's the feedback you get directly from people in real time. You can't buy that anywhere else. Actually, you can buy it elsewhere, and it costs a lot of money. It's free on Indiegogo. You get feedback, good and bad. This movie sucks. This movie's awesome. This movie's great. Why didn't you do this? What about this? Ask it invaluable feedback, good or bad. It's invaluable.
Yeah, that's probably one of the most valuable things to the equity crowdfunding sort of ecosystem is that feedback loop, right? So there are other platforms and other funding models which you can raise more or higher amounts of money in a shorter amount of time, but you don't grow in that organic way like you do with equity crowdfunding. If you can go and raise from one fund for $5 million and you can announce it and it'll be great, but you have not proven anything about your business by doing that. You've convinced a couple guys on a board, and that's it. And they might be really smart and really know your business, or you might just be a really great salesperson. But if you're doing it in an equity crowdfunding way, there are growing pains. You are going to learn things. You're going to think, well, maybe I need to change this a little bit. Maybe I need to change that. And you grow at the proper rate. So there's a lot of added benefits to it besides just being able to raise funds.
I also think that it makes you sort of like a mini CEO, right? It's not just, I'm a filmmaker now, right? Now you're running an actual business, right? And I think the campaign, I think you talked about this earlier, Michael, is really important, and you really do start to see people who are good at, promoting themselves and marketing and budgeting and the use of social media. Those people really rise to the top, and their campaigns really rise to the top, and their campaigns, I think, just do better, right? So it's not just this, I've got a movie, let me throw this on this site and, magic happens. There's more work to be done there, and I think it is also, I think, which is cool, creating a sort of making filmmakers business people, right? Which I think is a good thing, right? There's so many the stories you hear, whether it's on the film side or the music side, where artists they're just creative and they don't really understand how the business works, and they get screwed on the end. They don't understand what back end is. They don't understand adjusted net profits. They don't understand any of this stuff. And I think these kinds of equity crowdfunding is this great equalizer, but it forces you to understand the business of raising money.
I want to touch on this concept of the business of film, and I'm not just going to do this because I'm a lawyer, and obviously law excites me enormously, but I want to talk about the concept of the equity part of this, the fact that in doing this you are giving away some form of ownership in relation to your project. I'm going to start with you, Danny, because you're a lawyer like me. How do you feel managing the business? What form is it going to take, given that you're now bringing in these investors that you have found through literally a website? And then I'm going to ask you how you do it.
Okay. Yeah, as Michael mentioned earlier, this is also relatively new, right? I think for me, if I'm involved in any kind of project that was brought to me through, or that came to be through equity crowdfunding, I would want some sort of shareholder agreement, right? Or some agreement that sort of clearly lists out what you're getting, what you're not getting, who's making decisions, when are distributions made, when are profits basically distributed, if at all, who's preferred, who's not preferred, is it common stock, is it not? I think that document becomes really, really important, whether it's a shareholder agreement, an operating agreement, whatever you're going to call it, but that really needs to be clear as to how this business is going to be run, because I think, for a lot of people, they think, I own an equity in the, an equity share in this, and they kind of think they own the whole thing, right? And I think, or they're able to make decisions. The shareholder agreement, I think, should also, the ones that I've seen, investors below a certain amount are waiving certain rights, assigning certain rights to the movie, rights that they might otherwise have, moral rights and things like that. So I think that operating shareholder agreement is particularly important.
Let me just add before we jump in. So we definitely do all of that on our side. This is, again, heavily regulated by the SEC and FINRA. Like, when I say we're on the phone with SEC and FINRA daily, I mean it. We do everything 10,000% by the book. I can't speak for all of our competitors, and I won't, but I know that another reason we're taking this slow is we're in this for the long run, and we want to do it right. And Danny's absolutely right. On our platform, the first thing you see is the exact structure of the deal, exactly how it works. And then if you want to do your homework, there's actual documents. We have to file this stuff with the SEC, by the way. This isn't just like you throw it up there and cross your fingers. We have to go through hurdles just to put a deal up, as Michael knows. So there's tons of detail, like pages and pages, if you want to go that deep. And we absolutely have to make that public. Not because we're, again, nice people, but we're required to do so. So just FYI.
Yeah, I think that was more of a question for Michael, because they literally handle all of that stuff. I have a securities attorney who writes a lot of the deal that we do, but that all goes through Microventures and Indiegogo. So he's in touch with them as much as he is with me. Obviously, I have to decide on how it's structured, whether the investors get 100% of their money back plus 25% and then split 50-50 after that, or which is what we did on our revenue share with Adventures of Bunny Bravo, or if it's going to be a shareholder agreement like we're doing on Super Dope TV. Whether it be this or that ultimately has to be my decision, but it's a give and take, right? So Indiegogo and Microventures will say, well, we don't, we would rather do it this way because we think that the crowd will react better to that. We kind of make those decisions together, and then they go through a company called iDisclose, and then there's an accounting research firm that gets involved, and then there's the legal side, the securities attorney. That's all filed with the SEC and Edgar. And then it's all posted on our investment page on Microventures, which is also on Indiegogo. It's a part of Indiegogo.
I would say, I think, there's the SEC, that's there and the like, who are there to sort of police this and make sure that, these sort of floors are set, right? But I also think there's just sort of a reputational thing, and I just think disclosure is just a good thing, right? The last thing you want as an Indiegogo or a similar company is for people to sort of think that you're hiding the ball from them in some way or trying to take their money or trick them into doing something, right? And so I tend to think I see the SEC really as floor setting, and I think, then each business has to then decide who their sort of customer base is and how they then fortify that or supplement that to really respond to the needs and the disclosure needs that their specific customers have.
And I'll just make a blanket statement, but we've said no to lots of deals that have gone and launched on competitor sites that maybe don't do as much rigorous vetting or due diligence, and have raised tons of money, by the way, tons of money. We would still say no to those deals today, every time, because we've done our homework, and just because you can raise a lot of money doesn't mean it's a good investment, and the thing that we do best is due diligence, and it's a pain in the ass, and the SEC makes us jump through way too many hurdles because this is so new. It will change over time as they get more comfortable. But in the end of the day, that's a good thing. Yeah. And we're almost to an annoying point. We're the most compliant, the most rigorous, and trust me, it frustrates me sometimes, but it actually works out for the better for everyone. So don't look at what you see as it's always there. We are more on the disclose everything, and honestly, we'll look at something and say no. We're this thing could raise $5 million tomorrow, but we don't think this is a good investment, so no.
And I think there's a certain responsibility when you're helping to build an industry, right? And there's work to be done there, right? And so Indiegogo, you're trailblazing here, right? And so, yeah, there are more growing pains for you, right? And, a company 5-10 years from now is going to be able to sort of breeze through this stuff because of the work you guys have been doing. But there is, and I feel that too, even at, Image Nation, part of what we're trying to do here is help build the film, television, industry, particularly in Abu Dhabi, but the UAE. And there's just lots of things when I was a lawyer in Hollywood that I just wouldn't even think about, and I would just sort of assume that the people on the other side knew this or got this, and I wouldn't need to disclose it because it was understood, right? So my job becomes a lot more difficult as well because I have to sort of handhold people, but I think, there's a responsibility there, and, if I've signed up to be a part of this journey, you've signed up to be a part of this journey, and so it's a bit harder now, but I think it will, to your point, pay off in the end.
I gotta say, just because I know this is being filmed and my team are like, every investment is risky, just to be clear.
Yeah.
We do our homework. Many of our deals will likely fail, because most investments do, but all we can do is our best, but just so you know, every investment is extremely risky.
So on that extremely risky investment note, and I know I'm opening up a can of worms here, but we're talking about like growing really, really fast and just go, the companies that raise $5 million, but we wouldn't want to work with them. I'm sure everybody in here who's interested in investments and whatnot has been following the cryptocurrency trend and Bitcoin and whatnot. Well, that's obviously something that we've looked into, the idea of having a coin or a token, and if you look at the way that things have grown with that, and I ask everybody who's really long on Bitcoin and crypto in general, where's the value in that? And really, they see the value because in that other people are putting money into it, and then that's forcing it to go up and whatnot. And even Vitalik Buterin, the guy who started Ethereum, said that he doesn't think that Ethereum ever has to be spent. That it'll just keep going up, right? It'll be a currency that can just go up but never be spent or paid for. There'll be no like surplus and demand and whatnot, or supply and demand. So this to me is like the opposite of making sure that all the I's are dotted and all the T's are crossed. Obviously, there's some really smart people in crypto and they're doing things that are just amazing, but I think hanging out here where we're dealing with raises of $500,000, which what we did for Adventures of Bunny Bravo, making sure that everything is really, really solid is more important to me, because we can always do something a little bit bigger on the next thing, and if we did it in a more solid way on that first one.
I guess in a sense what you're doing with these level of investors is you're building a trust relationship with the market. I just want to talk to you, all of you, about film returns and return on investment, because obviously it's a pretty hot topic for anyone that wants to invest in film or in anything. Is like, when am I going to get my money back? When you're dealing with a company like Danny, they understand the risk in film. When you're dealing with high net worth individuals who might be angel investors, they also understand the risk in film. How do you communicate that risk to your potential investors without turning them off the project? How do you market that? And what sort of expectations do you think people genuinely have about returns?
That's a tricky one. So
Sorry.
No, it's good. It's a great question. So again, first of all, just on the very boring legal side, like we actually put like 8 pages of disclosures like at the bottom. Like, I don't expect everyone to read that, but just to be clear, it is all there. And we generate all that as part of this process. And then we try to, again, as Danny said before, like we really pride ourselves in like our pages actually might be like a little bit more boring. Maybe that's the wrong word, like, but they have all the info. Like, we're very specific about, we actually don't do any sort of financial projections. We don't do anything that's like, oh yeah, it's all fact. And we make sure every word on that page is fact and precise, and that's part of our process. And then we just try to do it with being transparent. Like Danny said, we put as much out there as possible with the boring legal risks that are, of course, there. And I guess related to that, though, it's funny, the first film we funded through equity crowdfunding was a horror film. and I'll admit, I am not a film financing expert by any means. I've learned a lot in the last year and a half, but horror is very interesting. You guys probably already know this, but like one of the reasons we found that deal attractive, not only because that team was incredible, and you can look into it, it's called The Field Guide to Evil, but it's a very the budget was super low, right? So this thing to make money at most simplistic terms, and Danny can like shred this apart if he wants, but like at the most simplistic way, like it didn't cost a lot to make this movie. So even if the movie only made like $1 million, they're probably making money off this movie, right? Whereas big budget movies are always risky because if it costs $100 million, guess what? You have to make a lot of money for anyone to make their money back. So the same thing with Michael. Some of his projects aren't as budget intense, if you will. So we look at that. Again, we will not put up a project. We ask all these questions, and I think knowing you're going with a trusted brand, like we do our homework as best as we can, and that's kind of how we try to de-risk it.
Yeah, that is, I would have to say that, yes, I agree with everything that Michael just said. Our business model has always been to, with the acquisition of the foreign animated content, we are buying a film which, if we had to produce from scratch in the U.S., would cost us between $20 and $200 million. And we took this model from Haim Saban, who did the Power Rangers when he bought the Japanese series and turned it into an American series. That would have cost him $15 million, but he bought it for like a few dollars and a candy bar. And they even gave him the costumes to put on the American actors to take back to do the other replacement scenes. So we buy these films for, something less than $100,000 usually. So I've gotten them for as little as $20,000. I've paid as much as $300,000. It's never been more than that. Our actors, because they only have to come in for a day, and they don't show their face, we can go up. So if they have a day rate of, so Robert De Niro, right? Can I say what people, I shouldn't say what people's day rates are.
We're in the
but I can say that whatever that day rate is, when they're just coming in to, and they don't have to like shave and wear anything nicer, and they just go into the vocal booth, we can get there, that day rate will be like 10% of that for us. So not only do we not have to have them for a whole week, we only need them for one day, and then we get 10% of that day rate. So I get actors for just like a couple dollars in a candy bar kind of thing. And then we bought the product for that, and then the rest of it is just, I can spend a lot of my writers and whatnot, and just to really get that creative piece down. But we are making these films, and I'm not saying that our films are as good technically as Pixar. I'm not an idiot. I'm not going to say that this can hold hold water in the same way that Toy Story does. But they're fun, and people laugh at them, and kids like them. And we spend like 1%, not 5%, not 10%, but less than 1%. And all marketing and everything included, we spend less than 1% of what like DreamWorks or Pixar spends on an equivalent length film.
Yeah, just to piggyback on some of the things Michael was saying, and to get back to, I think the original question, was around, how do we manage ROI and people's expectations on ROI. And I think one of the big things for me, I try to, no matter how many investors there are or how many zeros there are, I think I really look at investing as, if I loaned you money, what would I want to know? I would want to know when I'm going to get it back, if at all. I'd like you to, keep that budget as realistic to what you actually need as possible. I'd like you to keep me informed, with updates on here, here's where things are going. If there are hiccups along the way, like, I know I said this, but some things have changed, and here's how it's changed. So I really think disclosures are really important. I think communication is really important, and transparency, right? Because I think people understand that there is no guarantee, provided you also say that in all, caps and bold on your website. But I do think just sort of making sure that people don't feel surprised along the way, I think is really, really important, whether it's one investor or 100 of them,
And let me just add one thing. So equity crowdfunding, as Michael said, our platform, the minimum investment is $100. So we see checks for $100, and we see checks for $100,000. Okay, so the ROI expectation of the $100 investor is very different than the $100,000 investor. So we actually have to be be the medium for everyone. And I always like to say, we try to dumb it down for the least common denominator. And let me be clear, like someone putting in $100 may not even care about the investment. They're just like, this is a cool project, and they think it's crowdfunding. And crowdfunding's been around for 10 years. People still don't understand crowdfunding. Never mind. They're like, is this eBay? Am I buying something? What's happening? Is this Amazon? No, it's not. But okay. So like equity crowdfunding is so new, people don't get it. So I'm telling you right now that $100 might just be support it. You're not going to get rich off a $100 investment. I'll just say it right now. But you might get a little money back. Great. But someone putting $100,000 is going to look into every detail, hopefully, do their homework, ask questions in the forum, et cetera, and make an educated, hopeful investment. So it comes with both. The ROI expectation depends on the investor, I think.
Wonderful. Now, we're going to throw open now to questions from the floor. This is the bit where it gets interesting.
The wild cards.
Yeah. So, I think there's a microphone roaming around, so if you could just pop your...
No.
Lovely. No tricky questions, please. Keep it nice.
Okay. Obviously, we're in Dubai, and the perception, first of all, can we do it from Dubai?
Not yet.
Yeah, exactly. And secondly, even if we were affiliated with a US setup, would the perception of our region work negatively for raising that kind of money?
Okay, so two things. Regular perks, rewards crowdfunding, anyone can do it.
Yeah, that's still legal here.
So we've
Currently.
done campaigns on our perks platform from, this is true, I didn't even realize this many places in the world. It's like 232 countries and territories. I didn't even know there were that many, but we've done that many. So that's anywhere. The equity crowdfunding, this particular type of equity crowdfunding is US-centric, unfortunately for now. I don't want to get into details, but this type of equity crowdfunding we're talking about, you do have to have a US entity. That's first and foremost. And then it just depends on the details from there, but just to be clear. So it's not impossible. We've done things that actually are maybe not based in the US, et cetera, but the whole goal of it was based on this thing called the Jobs Act under Obama, when we had a good president. And I don't want to let that one settle for a bit. This is on film, right? Embarrassing. So, like the Jobs Act, the whole point of it was to, investment in America, et cetera. So yes, it is US-centric for a reason. So like, they don't want someone to raise money through equity crowdfunding and then ship it all back to a company in some other country and just has nothing to do with the US. Ultimately, they want the money to be spent in the US, for now.
And I think on the cultural piece, I think if I heard you correctly, you asked, would the sort of preconceived notions or stereotypes about being from this region impact the ability for you to raise money or invest in, whether it's in the US, in a project there. I think it just depends on the project, right? And the content, right? If it feels kind of like a propaganda piece or some sort of heavy sort of religious sort of content or whatever, I don't want to say anything offensive, probably, right? It might impact it, but if it has nothing to do with, religion or terrorism or whatever, then it feels like probably not, right? There are always going to be outliers who are just going to think, oh, Middle East, no, but I don't necessarily think. We invest. We have people investing in our local movies. We invest in movies overseas. I think it's about picking the right team and the right, projects and people who are sophisticated enough to understand that, stereotypes are what they are and they're not real most times. So I don't tend to see that problem, but obviously I don't run a site like Indiegogo. But are you guys seeing?
Again, on the perks, the regular, we've definitely funded many films or whatever projects from this region. I can't think of them on the top of my head, but I can get you that list. So equity is just it's all about this word regulation, okay? So it's all brand new. We're not even, to use the common baseball analogy, we're not even in the first inning. We haven't even picked the team yet. We are so early in this, it's gonna change. So Europe's 5-6 years ahead of us. We just started. I guarantee you this will change in the next 5 to 10 years, not only in the US, but globally, and people are starting to realize that this democratization of finance is just inevitable, and it isn't what you think about it or not. This is just how it should be.
And just to answer your question about the legalities here in the UAE, the government announced 2 or 3 weeks ago that they're going to be looking at equity crowdfunding and putting regulation in place for the UAE. Specifically, they're targeting SMEs rather than the film industry, but obviously there'll be a wash through to us as an industry. Let's see what they do.
So although the Jobs Act and Regulation CF Title III crowdfunding is only open to American entities, I do want to say that everybody in the UAE, including investment funds and individuals, is welcome to invest in any equity crowdfunding campaign at
we
Microventures,
strongly recommend
Yes, I wasn't going to say that, but yeah.
Got it.
Hey, guys, marketing, okay?
Okay.
Do we have any more questions from the floor? Yes. Oh, excellent.
Yikes.
Oh, we have 3 over here.
Hi, I'm an actor, director, and filmmaker, and I've just created a pilot for a feature film as a thriller and action, one of a first kind in the Middle East and the region itself. Just the question is there a ceiling for the fundraising to raise money, especially if, like, I have in mind major big Hollywood names to take a part of it, then I would know that they're going to take a lot of money out of this fundraising. And at the same time, what's your advice to create a very successful Indiegogo campaign or fundraising campaign? Thanks a lot.
Okay, I'm sure you have thoughts too, but I keep going back to the perks, regular side of Indiegogo, there's no limit. You can raise, we've done campaigns, 10, 13, 20 million dollars, like you can raise, it's hard to do, but you can do it. Again, this type of equity crowdfunding, as Michael mentioned, the one we're focused on is called Reg CF, or Regulation Crowdfunding, under the Jobs Act. One of the rules they put on it is you can only raise up to $1 million, or it's actually $1,070,000 technically, but from anyone, right? So this is open to any investor, by the way. It's not just accredited, it's anyone at all, non-accredited, accredited. The ceiling is $1,070,000. We personally have ways to raise more money. It would have to be from accredited only investors. But yes, this equity crowdfunding is a little bit more specific as to what you can and can't do. How to create a campaign is a longer one, but maybe you can give some tips on that.
Well, I was just listening to you. I got to think now. Okay. Well, I wanted to actually add to the Reg CF. There's another program of crowdfunding called Reg A and Reg A Plus, which allows you to raise up to $50 million. After that, it's a little bit different. The regulations are actually less strict than Reg CF, which makes people ask us why we chose Reg CF instead of Reg A. But so there's a lot of research to look into with that. There are obviously reasons why we chose Reg CF over Reg A, but so there's ceilings with each of those, but you can find the next step. We chose Reg CF because it seemed like the simplest thing and the most organic way to grow, right? How do you create a campaign for something like this? Well, you first have to create a good business model. So the reason I kind of went on about my business model and acquiring foreign content overseas and sort of decentralizing the production system, because most of the time it's all done in-house by one team and it takes a whole lot longer, right? If I made an animated film in the US, I'd spend 100 times more money, and it would take 3 or 4 years to do it, whereas we can do it in a few months in the way that we do it. So the funding of that is just an extension of that. So the way you think about your business model, whether it's finding a loophole and that allows you to buy something a lot cheaper and sell it for more expensive, or if it's something that's just going to be so specific or high quality, like you're into like the high-end product line, like you want to sell the equivalent of a Rolls Royce in whatever product vertical that you're in. Just know that and just follow that into the other branches, and the funding has to be with that. So if you're in the high-end product world, then you need to know who is interested in the high-end product financing, right? If you're in in cartoons, like I am, then you need to reach people who care about cartoons and who have kids that watch cartoons. And which actors do kids who watch cartoons like? So those are questions that I have to ask. We have to gather all that data and know who is integral to our business model, right? And for me, it was like Disney Channel and Nickelodeon stars. That's like, and now it's like moving over to YouTube. But still, it's YouTube stars who kind of understand how Nickelodeon and Disney Channel did it, I think. People might argue with that, but and then the people who are investing in the crowdfunding ventures or the campaigns that we're doing, a lot of times they're kids who they have kids who watch content like we produce, and there's more reasons for them to invest than just the financial return. They're interested in that business, right? Because you should never invest in a business that you don't understand. And if you don't like a business, you probably don't know much about it either, because you're not interested in learning about it. So you kind of have to have it as just a facet of the entire business. I know that was a little vague, but rather than saying, like spend this much on these ads and this much on those, which I think changes so much from campaign to campaign. Yeah, hope that helps.
I mean, I also think that, equity crowdfunding doesn't necessarily need to be for the entire budget of this film, right? You can use it for pieces of it, right? So it sounds like you've had a pilot, but you could also have used it to raise money for a pilot. You can use it to raise money for a few episodes in a series. You can use it to create some sort of sizzle reel or some sort of proof of concept, so that you can then take that to an accredited financer or someone and get out of this sort of equity crowdfunding limitations and go to real accredited investors and things like this, right? So I don't think you need to use equity crowdfund, because there are limits, right? You don't need to use that for the entire budget, right? So I think you need to sort of, I would say to you, think through what is the long-term plan, what is the financial plan here, and how, if at all, can you use equity crowdfunding as a part of that puzzle? Yeah.
Danny nailed it. I sent that to him telepathically. I was going to say the same thing. It doesn't have to be. And then two just quick things. The one in the Reg A Plus, just to answer that question, it sounds sexy. 50 million, why wouldn't you do that? It's way more expensive to do. We're talking $100,000 in legal fees just to get it set up, or more. And then extremely intense in terms of reporting. You're basically doing an IPO and you're a public, like, it's a nightmare. I'm not saying it's bad. It's a great resource for the right company, probably a later stage company that has a lot deeper pockets, et cetera. Reg CF, the whole point of it is it's cheap to set up, it's easy to do, the reporting's pretty light. So that's the kind of short answer. And then the number one tip I'd give you for any crowdfunding, as I said it before, is don't launch until you're confident you yourself and your community can bring 30% of your goal. If you launch and you're crossing your fingers and you're expecting us to do everything, you will fail. Almost every time.
Wonderful. One more question, I believe. One more question.
If you buy me a coffee, I'll answer questions out there.
Yeah.
Me too.
One, two. Okay. Hi.
I won't.
It sounds like this space could use a sort of a kind of a disclosure model that forces fundraising organizations to, disclose, financial information as well as non-financial information that are that could be easily digested by investors and regulators. Do I have that right? This is the impression I'm getting.
I don't think I'm sorry, I didn't hear your question.
Okay. So insofar as, you're raising money from non-professional investors, as it were, okay. But even if you were, I mean, it's always, so for example, you work in venture capital, you've got organizations, startups that come and pitch their projects to you, their companies to you. You'd like to be able to have a sort of a quick and pithy understanding of what the organization's about, yes? Yeah. Okay, so in this space, this need is more amplified by the sound of it, because you're not a professional money manager or investor per se. So if you've got a reporting model that forces a project owner or a fundraising organization to be transparent about what they do. Would that be a useful tool is what I'm...
I think, yeah, I mean, so as I think we've said a few times, sorry, the SEC definitely sets a floor in terms of the types of things. And again, we're only talking sort of Jobs Act, US-based sort of equity crowdfunding at this stage, primarily. There are, as I said earlier, I would say more like a floor that SEC sets, right? But then I think depending around disclosures, and you know, as Michael has said, they have pages and pages of disclosures on their website for each investment. But I think too, I see it as a floor, and so then you need to figure out who your audience is and what additional information they might need, right? I mean, the SEC is not going to run your business for you. It's going to say, if you want to be in a space like this, you must do at least this. But then it's your job as the business owner to then determine, okay, how much more do I need in order to be a successful business, in order to be responsive to my customer base, you know, whatever, what have you, is what I would say about that.
Yeah. Lovely. We're going to wrap it up because we've come to the end of our hour. I'd like to thank you all very much for being so attentive and giving us great questions. I particularly want to thank the panel who have, I think, been amazing today. Some great information. I understand they are going to hover outside or in here so that they are available to talk to you or to accept your donations for super
What's our daily rate? Investment, not donation.
Investments.
How much is my daily rate? My daily rate? Mine's like $0, right?
A couple dollars in a candy bar.
Excellent. So thank you very much, everybody, and thanks to our panel.
Thanks, guys. Thank you. Super dope.
Like have in mind major big Hollywood names to take a part of it, then I would know that they're going to take a lot of money out of this fundraising. And at the same time, what's your advice to create a very successful Indiegogo campaign or fundraising campaign? Thanks a lot.